We are here at the Chevron Leadership Initiative's Co-Mission Champions of Women in Sport event. Joining us right now is Goldman Sachs CEO David Solomon. He's here because Goldman Sachs has an interest in women's sports and in the LPGA in particular. But, David, I want to talk to you about what's happening in the markets right now. It's been a pretty confusing time. You're seeing all these weird things happening with equities dropping, bond yields going up, the dollar dropping pretty steadily, gold prices at all-time highs. And it's making people wonder what this all means. Is this a crisis of confidence in our markets right now? What do you read as to what we're seeing?
Well, first of all, thank you for having me, and it's good to be with you.
Thank you for joining us.
Absolutely. It's good to be with you in Houston. We're in a very different macro environment than we were in just a few months ago. I think the last time I was on the show and the last time I spoke to you guys was in Davos. And certainly we could all talk about kind of the aura of how people felt in Davos, but it was very, very different. You were coming into the inauguration. There was a lot of optimism around a lower regulatory environment and changes. And so now we're a few months into the administration, and instead of policy becoming more certain, we actually have a greater sense of uncertainty broadly, and it's having a big impact on asset prices and markets. And so the trade policy and the discussions about trade policy certainly have changed the level of uncertainty in markets. Markets are looking to reprice the value of things based on the uncertainty they have around what these policies will ultimately look like and how they will ultimately be implemented. And that is therefore causing shifts in fund flows on a very significant basis. And I think one of the things that's different about what we're seeing right now is normally when asset prices, when equities reprice, it's not surprising when you go into a more uncertain environment that equities reprice. But generally when they do, people buy U.S. Treasuries. But here we're seeing different behavior because at the margin, people that have been very, very inclined towards U.S. dollar assets are slightly shifting their preferences. And I'd say it's still at the margin, but as people are selling equities, that puts downward pressure on the dollar, given these are all U.S. equities. You've got investors around the world buying U.S. equities. And as they de-risk to some degree, that's putting pressure on the dollar, and that obviously has an impact on treasuries. So the level of uncertainty is high. I think it's good that there's been a delay, let's say, in the implementation of these reciprocal tariffs, but we still don't know what these deals are going to look like, where it's going to land, and what the ultimate impact on business will be. And so what's happening is business is pulling back. People are pulling back because they want to wait and see. They want a higher level of certainty before they make decisions and they move forward.
So you think this delay is good? You think it's good because it gives it a chance for them to undo some of those actions and activities?
I would say the delay is good because this was all happening very, very quickly. And, I think these are complicated issues and we need more time to see what the ultimate result will be. I think one of the things about the delay is the delay didn't decrease the level of uncertainty. In fact, in some ways, the delay increased the level of uncertainty. And so until businesses and individuals all over the world, not just here in the United States, can understand our trade policy, how it's going to be implemented, and that allows people to step back and make decisions about their capital spending, their investment, their planning. We can understand relationships in global markets with respect to the dollar. Until we settle down and get to a place that can understand that, we're going to see a higher level of volatility and continued pressure on U.S. asset prices.
So you say this is around the margins, just in terms of investors having less faith in the United States and other places. Do you think that this, because some people get hyperbolic about this and think that this is the end of the American exceptionalism when it comes to the markets. Do you think that's the case?
Well, I've been talking to clients all over the world, and I happened to be on a trip, overseas last week. I was in the Middle East a little bit last week, and the reason I say at the margin is kind of U.S. preeminence from an investment perspective and the long-term flow of international investors into U.S. assets because of the relative performance of the U.S. is something that's happened over a very long period of time. And you can't reverse it 100% in 5 minutes. And so what we're seeing is certain changes in behavior at the margin. But when you step back and you ask, what are the opportunities? Where can you go? Think about it as a balance in a portfolio. If you've got more U.S. dollar exposure, there are two ways that your portfolio rebalances and you have less U.S. dollar exposure. Right. One of them is you can sell the assets. The other is the relationship between, let's say you're a European investor, the relationship between the dollar and the euro changes. So I don't think that we're taking 80 years of a direction of travel and just reversing it instantaneously, but I do think these are serious things that you have to watch very, very carefully. And if we don't get to a policy place of certainty where people can trust and they can rely, it will have longer-term implications.
What I guess what is the alternative? Where people go?
Well, that's one of the things as I listen to clients and I talk to clients that are big capital allocators around the world. And we happened to have a conference in the Middle East last week where we had both, capital allocators from that region, but also a bunch of U.S. capital allocators come together. And when you step back and you look at the big buckets, the big opportunity buckets, whether it's the U.S., whether it's broadly across Europe, whether it's China, still. Even with all the issues that we're facing here, when you look at the innovation economy in the U.S., you look at what we're capable of from that perspective, you look at our capital markets, our capital formation, our financial system, we have enormous embedded advantages that I think investors around the world recognize, but they're concerned by the level of uncertainty. They're concerned by the pace of change. And they're looking for more clarity as to how this will settle down.
And the tariffs in themselves, where do you think things will settle down? If markets are reacting and trying to reprice to whatever that ultimate place is going to be, what do you think ultimately happens with tariffs?
Well, I'm watching as you're watching. I think the administration has been clear they want a base level of tariffs to stay in place. But I think it would be very helpful. My understanding is there are a number of discussions going on with various nations. It would be good to see a deal or two put forward so there's a construct that people can understand and people can start to say, okay, if that's what these deals are going to look like, this is a framework that we can start to think about and we can start to plan as we look forward.
If you had framework like that was put out with some of these deals, where are the equities markets priced to those deals? Would there be relief in the equity markets at this point? Would it?
I'm not a good speculator as to ups and downs in equity markets, but the one thing I know for sure, if you can create a roadmap and a clear understanding as to where we're going and what the desired result is, confidence, will improve. Will improve equity market prices.
David.
And markets tend to overreact in the short term. We've all been through, stress. In markets, they overreact, but you get to a different place when you look forward 6, 12, 18 months. You get to a different place where the market has digested that change in the macro environment. It will be no different here.